Okay, this one is 2007 paper 1 question 6. So this question, this is how it says. Bai and Chin are partners in a printing firm. Their financial year is 1 June to 31st May. Okay, so this one is the trial balance at 31st May 2007. Okay, this means that this trial balance is from 1 June 2006 to 31st May 2007. Okay, here says they share profits in a ratio of 2 to 1, and to retain the most experienced printer, Abel, they offer her partnership commencing on 1 September 2006. So that means now this is quite similar to the previous questions. There are two stories now. So that means from 1 June 2006 to 31st August 2006, it was just Bai and Chin in the partnership. But from 1 September 2006, Abel joined the partnership. Okay, so this is the page of the question. And then A says, prepare profit and loss and appropriation account for the year ended 31 May 2007. B, capital account and current account for each partner. Clearly, showing clearly the effect of the partnership changes. And C, the balance sheet. Okay, so this is the trial balance. You have premises, plant and machinery, and then after that you have gross profit, business expenses. So roughly I know, okay, here there is two periods in question. So I should do the 2 periods profit and loss and the appropriation account. And then, so what I will do is I will lay out my question first. I'll lay out. So this is profit and loss and appropriation account for the year ended 31 May 2007. So there are 2 periods in question. 1st June 2006 to 31st August 2006. This is 3 months. And the other one from 1 September to 31st May, and this will be the 9 months. So, and this is the total column. So I do out my column like this first. So that means now I can look at the question. In the question, in the trial balance, there's gross profit. Gross profit 480,000. Okay, you should put all the dollar sign here, 480,000. And then also in the trial balance, there is business expenses. Okay, so business minus business expenses. Okay, so this business expenses, it says that including wages and salary. So now there is some adjustment needed for wages and salary. Business expenses including wages and salary. So here says, okay, this one, number 1 is regarding goodwill, number 2 is not wages. Number 4 here, Abel annual salary of 48,000 is to stop, but she is to receive partnership annual salary of 36,000 in addition to a share of profit. So that means I'm going to exclude the 48,000 Abel salary from the business expenses. Okay. So this gross profit minus business expenses, 192,000. This 192,000 is inclusive of the 48,000 Abel's annual salary. So this is too much. So I minus 480,000 minus 192. Then I add back 48,000. Okay, so that means, in other words, this negative 192 is the business expenses that is inclusive of Abel's salary. I go and take out the 48,000 from this 192. Okay, so then my adjusted net profit, gross profit minus the business expenses, excluding and now we exclude the Abel salary from the business expenses, then I get the adjusted net profit. Okay, so this net profit, I will prorate it to the 9 months and 3 months here like this. So the period 1st June to 31st August, this is before Abel become a partner. She was paid annual salary of 48,000 times 3 over 12 times 3 months over 12 months. This is the annual salary. So 3 months will be 12,000. So after she become partner, there's no annual salary. Okay, there's no annual salary. But there is partner salary. Okay, partner salary as stated in note 4 in the question is 36,000. Okay, 36,000 for 1 year times 9 months over 12 months will be 27,000. Okay, so is then here, then how about depreciation? Okay, look at note 2 of the question here. The book value of premises is to increase by 70,000. Is to increase. Book value of premises is 300. So increase by 70,000 will be 370. And the value of plant and machinery is to be reduced by 40,000. So this will be reduced to 240. And then here says depreciation is to be provided at 20% per annum on the written down value of plant and machinery and motor vehicle. So premises got no depreciation. So plant and machinery, the written down value will be 240,000. So then now we calculate the depreciation, 280 minus 240, then plus the motor vehicle as stated in the trial balance, the written down value is 80,000. So you close bracket times 25%. 25% is same as times 0.25. 0.25 means 25%. Okay, so then this one, you solve this equation, you will get 80,000. Depreciation is 80,000 for the whole year. So you prorate it 9 months and 3 months. So this is the depreciation for 3 months and 9 months. So then here, this one you minus this one, you get net profit. Net profit. Okay, then you minus able salary, then you get net profit available for corporation. Okay, for the first 3 months, it was just buy and chin, and the profit sharing ratio is 2:1. Buy 2 and chin 1. So 52,000 you times 2/3 you get this one, and you times 1/3 you get this one. So this is 52,000 again. And then in the note 5 of the question, after able join in, the profit ratio is 1 to 1. Buy will be 3 and chin is 2. So you appropriate or you divide the profit in this ratio. And after that you add across. Okay, so then I've completed part A of the question. Then part B says prepare a current account, so you can lay out first, and a capital account. So you lay out your current account and your capital account. Okay, so then now you look in the trial balance. You look in the trial balance. Balance brought, BF means balance brought down, same. Okay, balance brought down. Buy and chin. Buy, the balance brought down, the capital is 165,000, and then chin is 200,000. Okay, able, at the beginning of the year, able, and at the beginning of the year, that means on 1st June 2006, Abel was not a partner yet. After that, she joined the partnership, and then she paid 30,000 into the company, into the partnership bank account as her capital. So 30,000 here. Okay, so then now I can solve the current account a bit first. Current account, this is the balance brought forward. Okay, balance brought forward. You got to look in the trial balance. So balance brought forward, buy is 55,000, chin is 45,000, and then drawings will be over this side. Okay, so this one, the salary before the partnership okay, so this is the partnership salary. Okay, so give to Abel over here. So same story like the previous question. Same story like the previous question. I have so-called assumed that that the firm has paid Abel 48,000. Okay, has paid Abel 48,000 for the whole year's salary. For the whole year's salary as a staff. Okay, they have not done any adjustment yet. So over here I will adjust. I will give her the partner salary, and I will take back her employee salary. You know, here 48,000 12,000 would be the 3 months, and then I would take back the 36,000 as excess employee salary that I accidentally gave to her. Okay, I take back, and then I gave her the partnership salary. So this is the salary adjustment. Okay, then the profit sharing is gotten from part A of the question. Then now we close the account. So that means to close the account, you see which side bigger, then you put a bigger number on the other side. Then the difference will be the balance. CF means carry forward. It's same as carry down. Will be the balance carried down. So the balance carried down, brought forward of the partner's current account, if I net it off, is 210,000. Then now the capital account. The capital account, then okay, so this one we are talking about goodwill. So in note 1 of the goodwill, it says that goodwill is to be valued at 120,000, but goodwill should not be recorded in the books of accounts. So goodwill will be same story. Goodwill, you should credit it to the old partner at the old profit sharing ratio, and you debit it from all the new and ongoing partners at the new profit sharing ratio. Okay, so then now then now the revaluation. Okay, so the revaluation now, you see here the book value of premises is to be increased by 70,000, and the value of plant and machinery reduced by 40,000. So that means the net increase in value of the fixed asset is 30,000. 30,000, this one should be credited to the old partner's capital account in the old profit sharing ratio. So credited to Bai and Chin in the old profit sharing ratio. Okay, so this is my workings for it. Then I come to balance sheet. Balance sheet will be easy already. So this one, premises increase in value by 70,000, so 370. Plant and machinery 280 minus 40, which is the reduction in value. The plant and machinery is to be reduced value by 40,000, and then 60,000 is the depreciation for this year's depreciation for plant and machinery. Okay, as calculated here. 280 minus 40 times 0.25 is 60,000. Okay, then vehicles, you take the 80,000 minus depreciation, you get 60,000. Then debtors is straight away gotten from the trial balance in the question. And then stock is also gotten straight from the trial balance, so it's easy. Then partners capital account is what you got, is what you have done over here. So you net it off, I got 425. Okay, and then partners current account also gotten from part B of the question. Creditors 110 is gotten from the trial balance, and amount owing to bank 35,000. In other words, you can put this as a bank overdraft also. This is actually indeed a bank overdraft, which I gotten from the trial balance over here. Okay, this is on the credit side. Okay, so then that means I have finished already. You see, when you have done all the past year exam question, you get faster and faster. That is because the question becomes similar after you practice quite many of it. Okay, thanks.